All right, so I'm going to go on now to the financial results. So our headlines of this presentation are that Berrett-Koehler revenues that keep rising, both print and digital. The significant thing here is that our print revenues have been going up where the rest of the industries have been going down for the last 2 years, which is, I don't know that we can keep that happening, but that's what's been happening so far because we really had great lists of books and a lot of strength in our backlist, and we're kind of firing on all cylinders. We've been outperforming the publishing industry in many respects. Our profits are healthy, and we've substantially lowered our debt and strengthened our balance sheet, as I'm going to talk about. We were named by Publishers Weekly a few months ago as a small publishing standout. We're the 5th fastest growing small publisher for the last 2 years in their survey. Now there may have been other small publishers that didn't bother to apply, but it was still good to see that. Now, in terms of our outperforming the publishing industry, if you look on the far left, our total revenues last year, 2011, went up 8%. In the industry as a whole, revenues went down 7%. The source here is the Association of American Publishers, as reported in Publishers Weekly, March 5th, 2012. And then, as I said, our print revenues went up slightly, whereas within the publishing industry as a whole in the U.S., print sales went down 17%, so really outperforming the industry in that respect. If you look under digital sales, it doesn't look so impressive, but that's because Berrett-Koehler had so much larger of a base that we were starting out. We got a jump on the rest of the industry, and so even though our 85% growth is actually much bigger growth than the 117% from a much smaller base within the rest of the industry. And a lot of the growth in the rest of the industry has been happening in the fiction area, romance novels especially, and so we're really outperforming the industry in terms of digital sales in the nonfiction area. Our subsidiary rights revenues are going up as well, which aren't reported in the AAP figures. So our historical revenues, as you see, this in 2011 they went up to 7.6 million. We hit a low point in 2008, 2009 because of the recession, but we've managed to rebound well from that, and so we had 2 strong years of growth in 2010 and 2011. Healthy profit again. You see our pre-tax profits. We are not shirking our income tax responsibilities. We're paying our fair share. We don't have our money sequestered out in the Cayman Islands or somewhere like that. I realize that that's a bad thing to say to shareholders. You may have some saying, you guys are not with it. You guys need to figure out how to shelter your income. But we haven't done that. So net profit, healthy. So it's a 9th profitable year in a row. A couple of years, we just eked out small profits during the recession years, but we were profitable. A lot of publishing companies were unprofitable during the recessionary years, and our profits have rebounded well. We're in the strongest financial position in our history. During this period, our total assets have increased by 53%, and our liabilities have gone down by 34%. So we've greatly improved our balance sheet, and that's continuing this year. So our strong results are continuing in 2012. So far, according to the Publishers Weekly, the first 6 months of this year, the whole print sales in the United States are down 14%. Ours are up 11% in the first 6 months of this year. The strong start to the year is also in terms of digital income, where our digital revenue is up 84%, subsidiary rights income is up 8%, and our total revenue is up 20% for the first 6 months of this year. So it's a great start. In terms of profitability, now here I'm using May 31st numbers rather than 6/30 numbers because we haven't finished our financial statements for June 30th yet, but probably preparing for this meeting. But Our pre-tax profit increased from $280,000 as of May 31st of last year to $538,000 as of May 31st this year, almost double. Total liabilities decreased, and this is really pretty impressive, from $2,879,000 to $2,036,000 during that one-year swing. And the biggest way that our liabilities went down is the use of our line of credit at our bank, where last year, as of May 31, we'd used $1,274,000. This year, as of May 31, only $508,000. The good news has continued. In the month and a half since then, our line of credit balance has gone down to about half that, to about $250,000. 20-year publishing highlights. We've published over 480 new books. Only somewhere between 20 and 30 of them have gone out of print during these 20 years, which is pretty amazing. Over 400 are available in digital format. We've sold over 160, or about a third of our total list, have sold over 20,000 copies, which that number, all of these sales numbers include sales of all U.S. and international editions. Almost 10%, or 40, have sold over 100,000 copies. 3 have sold over 1 million copies, which are Leadership and Self-Deception, Confessions of an Economic Hitman, and Eat That Frog, all of whose authors will be here this evening. Our life-to-date revenues passed $100 million last year. This year, we're publishing 22 new books, 6 new editions, 2 paperback reissues, 2 digital apps and enhanced ebooks, 32 total publications. That's down a little bit for us. It's below the 35 to 40 that we aim for. We expect to be back in that range, back in the 35 to 40 range in 2013. And so it's still pretty, it's impressive that even with fewer books, our revenues are up so much. Our books have been winning a lot of awards, as they do each year. We just learned of a couple more awards that are happening at the Academy of Management in a week and a half. So we're pleased. Now, all is not easy. You know, even though a lot of things are going our way, there are many challenges. I'm going to go rapid fire through these next series of slides. My point is not to explain them, but rather to give a balanced picture. Many of these challenges are going to be discussed by the other presenters during their presentations. I'll just focus here on changing business models. We ain't seen nothing yet. This publishing marketplace, if we think we've seen the worst of the changes, forget it. It's just getting going in terms of how our marketplace is being transformed. And every year, the 10 awful truths about book publishing get more and more awful. I mean, that's just, it's kind of like Moore's Law. You can just count on it, that they're going to be more and more awful the next year. Digital publishing challenges. The big challenge here is that we've had to learn how to run dual companies. Rick Wilson is going to talk about that. That on, we've got the print company, but then we've also got the digital company. And the problem is that we have to reinvent our company and create all the digital infrastructure, systems, and so on. At the same time, we're racing down the road with the print company going 100 miles an hour. So it's not easy. Marketing challenge is a challenge as always, growing revenues. In a marketplace where the revenues are going down across their whole marketplace, for us to keep growing our revenues is tough. It's not easy. We have to bring in more customers and many different types of customers. We are going to be doing new strategic planning this year. In 2008 was our last strategic planning, which has served us very well. Johanna's going to be talking about that. Financial challenges, we need to keep reducing debt and building financial reserves. We're trying to get completely out of our line of credit and have reserves. Creating capital structure that supports our ongoing independence. I'm going to talk quite a bit about that. Organizational challenges, reducing staff overload. This is endemic in book publishing, and we have to keep working at that. A lot of focus on developing board of directors structures. Diane and Julie will be talking about that. And then institutionalizing our mission, values, commitments, and practices, the things that are good, that are valuable, that are positive about Berrett-Koehler. We'll be talking about that. Stakeholder challenges. We need to improve the recompense to our stakeholder groups, employees, authors, and especially shareholders. We need to audit and improve our social, organizational, and environmental responsibilities. We're starting to do that, and we'll talk about ways of doing more of that. So now the next sections of our shareholders meeting are going to be organized around the 6 growth strategies that came out of our strategic planning in 2008. We've been using them ever since that, out of 2008. They've proved very productive, very useful, very fruitful for us, and we're using them to organize the next presentations. Finally, one of the interesting things that's happening right now is that Murray Silverman and Sally Back, which I'll ask you to stand if you would please. They are with the Center for Ethical and Sustainable Business at San Francisco State University, and they approached us about doing case studies like Harvard cases about Berrett-Koehler, on how Berrett-Koehler is seeking to institutionalize our mission, values, practices through a variety of mechanisms, and another case still being decided. And we've agreed to their request, and they may be talking to some of you here to get your perspectives on Berrett-Koehler. So I'm going to now turn the time over to Johanna, who's going to talk about global trends.